Hey, folks, Rick Berube here for another it went, Paul. Oh, it's back. Oh, sorry. Hey, folks, Rick Berube here with another Facebook Live. This is live is awesome, isn't it? And we are very fortunate today from Prosperity Mortgage to have Eddie Cepeda. Eddie, welcome.
Good morning, everybody.
Now, is that a window with your car out back, or is that a poster?
It is a picture.
It's a picture. Oh, wow.
Yeah, I painted one. Yeah.
All right, cool. All right, Eddie, well, tell everybody a little about yourself, how long you've been doing this, all that good stuff, please.
Sure. Well, my name is Eddie Cepeda. I've been in the business for 30 years. I'm a native of Las Vegas, born and raised. Graduated from Bishop Gorman High School and then went to UNLV.
Nice.
And I graduated with a degree in bachelor with a criminal justice degree.
Wow.
Yeah.
That's helpful in the mortgage business because a lot of people do criminal activity.
Yeah,
I'm only kidding. Well, that's interesting. I didn't know you went to Gorman and then you went to UNLV. Good for you.
Yeah,
took advantage of those good in-state discounts, right?
Correct. Yeah. Went to the old Gorman when it used to be on Maryland Parkway.
Right. All right. Cool. Well, that's awesome, man. Yeah. All right. Love it. And my wife's a native too. And she, I always forget, she went to Durango, I think. She went to Durango.
Oh,
yeah.
okay.
And then she graduated from UNLV too.
Oh, cool.
Yeah. So that's cool. Yeah. It's a great school. It's a great place to go to college. I mean, especially since it's right here and they give a great in-state deal.
Correct. Yeah. Tuition is low and, very good education.
Education is good. Yeah. All right, cool. All right, tell us a little about what's going on out there. I know I had you at Success Series last week. You guys did a great job. You gave a couple of good examples, but tell them about, what's the, it looks like the trend is headed back in a good direction, isn't it?
Correct, yeah. I mean, rates are starting to move down since last Thursday. The rates have dropped about a half a point. So, for example, if you were at a 7% interest rate, now you're going to be about 6.5%.
Right.
And that's not even taken into account with some of the programs that are available in the market. For example, if you were to do a 2-1 buy down, I'll use that as an example. So on a 2-1 buy down, what happens is the seller contributes towards the buyer's discount points to buy down the rate. And normally the cost of that will be 2.375 to 2.5% of the loan amount. And what happens is the first year, the borrower's interest rate is as low as 2% of what the going rate is. So, for example, if the going rate right now is at 6.5, that first year is going to actually be 4.5.
Right.
The second year, it's going to move up to 5.5, and then the third year in the life of the loan is going to move up back to 6.5. And the reason why this program's out there right now is because the seller pays for it. The buyer is not allowed to pay for it. No other party is there. And it gives you the ability to be able to start off with a low payment. And also, it's a fixed rate. It's not adjustable or anything like that. It's actually fixed rate for owner-occupied and conventional loans. And the borrower has the ability to be making that low payment for the first year and then the second year. And during that time, if the rates continue in the pattern that they're going, let's say a year down the road, they want to refinance, Rick, the good thing is that money that was used to drop down those rates, it's set into an account that if that client refinances, whatever's left over from that period, from that buy down, will be applied to the principal of the loan.
So, principal reduction. Well, that's a sweet program because we know the rates will come. I mean, they went up. I mean, let's say we got spoiled by 3%. I've been doing this 38 years. You've been doing it 30 years. First time I've ever seen any rates that started with 3s or 4s, and then a couple months of even 2.9 and that craziness. I was like, wow, that's free.
Crazy rate.
Yeah, that's free. So that's gone, and we may never see that again. Who knows? But very possible we'll see 4s and 5s again for sure.
For sure, I would say within the next year, there's a very good possibility. If the trend continues going the same way, that we will be in the 5s. Don't know if we'll be low 5s, high 5s, or mid 5s, but we'll be roaming around the 5s on owner-occupied properties.
Right. So let's say I've got 2 years worth of buy down built in. So I've used 12 months. So I'll have 12 months, whatever that 12 months buy down number is. add it all together to either use towards my cost of refinancing or just a principal reduction.
To the principal reduction, yeah. So what happens is when you go ahead and do that refinance, they're going to see that money in the account. Let's say, it's $3,000. So those 3,000 could technically be applied towards the closing cost, or you can go ahead and apply it towards the principal. So it would be lower on there. And that's just only applies for the 2-1 buy downs.
That's great. That's a great program. And then you refinance somewhere in there. And like you guys always say, marry the house, date the rate, because you can definitely the rate coming up soon.
Definitely.
Good. And I think since then, and probably the election and so forth, I think we've seen a little tick up in the amount of people doing applications, haven't we?
You know what? Yeah. This week, we've seen more applications coming in, and we believe that as the days go by and the months, we're going to start seeing volume pick up. And right now, I personally think it's a great time to buy, because if you're a buyer, you have the ability to buy down your rate. Very good time to negotiate how much money you can get in closing costs.
Mm-hmm.
And you're able to get the house at a lower price, even though the rate might be higher than those the high 2 rates that we were talking about the last 2 years. It's still a better deal, because back then you had to pay over the sales price the majority of the time. You had to pay for your own closing costs, versus now you don't. There's a very good chance that you can get the seller to possibly drop down the price and get closing costs. I had several scenarios like that with the transactions I'm closing this month and the previous month. The majority of them that I did, Rick, were the seller was paying for the closing costs.
Yeah, that hasn't happened in a while.
Yeah, it's been a long time. So it's good to see it happening now.
Yeah, even Dave Ramsey is saying, buy the house. Have you heard that skit?
Yeah, I've heard that saying, yes.
With his accent, buy the house. Don't not buy the house. Buy the house. Yeah, the rates are high, but buy the house because, and he's right. He doesn't explain it in detail why, but he says in the next 5 years, it's the best time to buy a house, because you have all these buyers on the sidelines waiting for the rates to come down. My first question to somebody buying would be, okay, so the rates comes down, what happens next? Oh, you mean everybody in the sidelines jump in? Yeah, and then we go through, like, I don't know if it'll be quite like, remember June 2020, July, it was crazy for about a 12-month period. And then it was just semi-crazy for about 6 months after that, until the rates went up. Think about this. Think about the fact that the market is still trudging along and rates are 2.5 times higher than they were in January. We've been through 4.75 and 1/2 a point increase in the base rate. It's a pretty crazy time so I can understand why buyers are in shock, but if they look at the positive, which is, like you just said, Eddie, less competition, you can have a home inspection and an appraisal. You don't have to waive those anymore. You can actually, if there's stuff on the inspection, you can have it done. And then you can get the seller to contribute to buy down your rate or your closing cost, or you're putting over 20% down, you can do both of those, right?
Yeah, we had a scenario, a transaction that we're closing this month. It was a VA loan. We were able to drop the sales price about $40,000. Plus, on top of that, they went ahead and bought down the rate for the borrower and paid almost 40% of the remainder closing costs. Mm-hmm. You cannot see that on another transaction back in January or February. So if for any reason these borrowers decide to refinance in 6 months when the rates, let's say they're lower, it didn't cost them any money to buy this house on this VA, because the closing costs were paid by the seller.
Yeah, I love that. And I just think right now, if you're a buyer and you're looking for your primary residence, it is a much better time to buy with the buy down situation, because then you can refinance, and it's like a streamlined refinance too, right? If they go through you guys again, if they start through you guys and go through you guys again.
On government loans, they're going to be streamlined. You don't have to provide any documentation. Just that on VAs, on government loans, you got to wait a little bit longer. There's a waiting period. Like on a VA, you got to wait 210 days in order to refinance.
Right.
And then conventionals, you can refinance right away. There's technically no waiting period on conventionals.
Okay, cool. Yeah, and government loans take a little bit longer once you do the process too, because it's a government loan.
Right, get information. Yeah, well, but with Hero Prosperity, we're able to do it in 30 days at the
That's great.
max. Correct.
That's great. So it's, I mean, it's really a great time to buy if you look at all the, and I know, look at first thing is if I'm a buyer agent working with a buyer, I'm going to give all this information. I'm not going to try to convince them, but I'm going to give them all this information because if it seems like you see a lot of stuff on social media, oh, it's the best time, and from realtors, from mortgage originators, a lot of them always say it's the best time, but really, right now, this little window, it's kind of like the eye of a storm because what Dave Ramsey talked about was absolutely true. In the next 5 years, this probably is the best time to buy. He just didn't explain why, which is you can't take away the fact that across the country we have way more people who can buy and should than homes to sell them. So we still have a housing shortage, which supply and demand say is going to drive prices back up. But it's just kind of like we're on pause. Boop, pause, because the rates shocked people. The Fed, I don't know what the Fed is on, but I wish they would stop taking it because, pumping money into the government and into the economy, during COVID is what caused inflation. The rates, and then when it starts coming down, think about this. It went from 8.4 to 7.7 last week, right? And what happened? Stock market went up 1,200 points.
Yeah.
The applications went up. So it would be nice if people acted a little less like sheep and just, oh, we're all doing it. Let's do it together, right?
Yeah.
And understood, this is a great time to buy, and this is why, and I can get what I want, and just like when COVID, who would have thought when we had COVID, right, that May, what was it? It was like March. It started. By the time May came, we went on a woo. Who would have thought it would recover? Not only recover, but go into that kind of pace, right? We could see something very similar if this continues for a few more months.
Yeah, I agree with you because the way I view it is the way we went ahead with COVID, the rates dropped so fast and the market got crazy. The same thing could possibly happen with this scenario.
Yeah. Yeah, if the Fed just wakes up a little bit and says, "Oh, well, maybe we overspice this a little bit," just like we did in reverse. It's like, wouldn't it just be nice? What about consistency and moderation? Ooh. Yeah. I guess that doesn't go with government, unfortunately. Even though we have the best system in the world, I'm not complaining. I'm just saying it would be nice.
Yeah, I don't understand. Yeah.
All right. So we got rate buy downs. We got 2-to-1. Give them that example of when you guys helped that buyer 20% down, 450,000 purchase price, lower the price 35 or pay the buy down. Do you remember that one you guys gave on Thursday?
Yeah. What's it called? So basically that scenario, though, the way it was is I had another one that I did personally. It was a 300,000 purchase, and it was going to take about $38,000 for the seller to lower down this price of the house instead of spending around $12,000 to have a savings of about $280 a month. So the seller was selling a house for $300. They would have had to drop it down to around $268 purchase price to be able to give that savings of $280. Instead, if they were just to go ahead and do, in this scenario, it was going to be a straight buy down. So what a straight buy down is, you take a loan and then you buy down the rate X amount of points, and it's for the life of the loan for that particular scenario. And this particular client was saving about $270 to $280. But if they would just want to go ahead and drop the price, they would have had to go ahead and drop it that much from $300 to $268 versus just going ahead, if I'm a seller, and giving the $12,000 to buy down the rate. So to make the property values where they're at.
So to make the payment the same for the buyer, okay, either buy the rate down $12,000 or lower the price $32,000. So that's an easy decision for a seller.
Correct. Yeah, on that scenario as well, and not going into account the 2-1 buy downs, because on the 2-1 buy downs, you have that first year, and normally it's going to be 2 points lower. So just depending where you're at, you have different savings on each one. But it is cheaper for a seller to pay for buyer's buy down or discount points than to go ahead having to do a significant drop in price, which
it's a great way to put it. Yeah, I actually did a video on that. I stole it from you guys. I did a video on that after the next day. But that's a great way to present it as an agent. Okay. Look, my buyer is willing and comfortable with making payments of X, which would require us to make an offer of this, or your seller can buy the rate down 2 points for 12,000 instead of 32, and now we're all on the same page. To me, that's a really good way to present it. I think, as far as if I'm a buyer agent.
Correct. And we have for people that they put less than 20% down. Let's say they put 10% down. We have the ability of being able to remove the PMI, the private mortgage insurance. There's ways of either actually finance it into the loan to help drop the payments, or actually present it to the seller and have them pay for that. So that's another option to be able to have lower payments. It just depends on the client's FICO score, their criteria, that you could actually build the loan to those scenarios. So there is a lot of ways right now in the market to be able to buy down rates, to pay off the PMI, the private mortgage insurance on conventional loans, or do 2-1 buy down. So it's important to talk to loan officers to be able for us to create that information. And we can, all of us at Prosperity, as long
Yeah.
the sheet out, and the borrower can go ahead and look at that. And we don't even have to pull credit. All we need to do is find out what the purchase price is, down payment, middle FICO score, and the type of occupancy. And it will take me about 15 minutes to get that sheet over to the borrower or the agent to run that scenario.
Yep. Yet another reason to talk to you or John or Karen or Dee or whoever, okay, before you go out with your buyers and get them pre-qualified, take them through the whole pre-qualifying process, so you can give them options on how to present this. And let's face it, the one good thing about this market that's a little bit slower is that, skills, options, education, experience, all of that comes in because, contingent sales and all that stuff is going on right now. And if you can present this in a way that makes sense, because sellers want to sell, let's face it. Look at it. We still can't forget the fact that if I'm a seller, and I live in Las Vegas or Arizona or California, pretty much the appreciation has been very similar. Arizona's kind of led the way just by a little, right? Yeah. But pretty much if you've been in the house 3 or 4 years, your house has gone up 55% in value. If you've been in there 7 or 8 years, it's doubled in value. So sellers are still, incredibly, it's an incredible advantageous time for them right now. It's no longer Disneyland, but it's pretty damn close.
Pretty close to it, yeah.
Yeah, Fantasyland. Okay. Yeah. All right. So any other tips you want to give them, Eddie, that you can think of? We covered a lot, though. Anything else you can think of in this type of market that may be helpful?
Well, I want to share with you something that Prosperity has. So basically, Prosperity has a match or beat, or the borrower receives $1,000 if we're not able to match or beat. So what happens is on FHA, VA, or conventional loans, when the borrower applies with us, we pull credit, we run a scenario for them. And if for any reason they go to another lender or somebody else is offering a better rate, if we either cannot match the rate and the fees, we will go ahead and give them $1,000.
Nice.
That's how confident we are on our rates and fees that we have to offer to our borrowers.
I love it. Meet or beat, baby. That's good.
Yeah.
I love it. No, that's good. And that's good. And you guys have a tremendous amount of experience. I've been at the company almost 9 years now, and we've had 3 or 4 different mortgage companies, and it's really good that Prosperity now owned by corporate, us owned by corporate. You guys are going to be here, and I'm really impressed with people like yourself and John, and like I said, Karen and Dee, and in Arizona, Roy and John, Eric. And I mean, you guys have a tremendous amount of people at Prosperity in all 4 of our markets that know what they're doing. And let's face it, when you know what you're doing and you've been doing this for a while, the fact that you guys are a mortgage broker and have all those programs, okay, you're not just a number. And the biggest complaint I hear is when someone says, I was at Wells Fargo, and I always go, I know what's coming. You were denied a week before the closing, right? Or they stopped calling you, or, yep. Well, unfortunately, that's typical because you either fit in this little box or they don't want to waste their time on you. And you guys will tell them right up front. You hand carry the thing right through. I mean, your underwriting is right there, and you guys are, 100%. You guys will find out fast, and it's good. And I'm shocked at some of the things that you guys do as far as An example I just gave where a property didn't close, and now 10 days later, you guys are closing this property. A couple of stories I've heard, which is incredible. Yeah. So great job, guys.
Yeah, we have the ability, and the greatest thing about us is that we're direct lenders to FHA, VA, conventional. So there's no extra conditions.
Yep. Awesome, my man. Well, hey, everybody. Eddie Cepeda from Prosperity Mortgage. Give them a chance. Give them a shot, especially if you're with us. Okay?
Yes,
please do. Right? All right, man. Thanks for taking your time out. Everybody else will do this again next week. And Eddie, I'll see you soon.
No problem. Take care of yourself. Bye-bye.
Okay. Bye-bye now.